A confluence of events are colliding to produce the most pivotal period in years for issues affecting your wealth. The most sweeping revision to the U.S. tax code in 3 decades lurched toward passage, requiring urgent attention to tax-cutting opportunities open only until December 31st, 2017. Here's a top 10 list of tips and tricky situations. Though the new tax law won't be finalized until late December, it would be unwise to wait for the bill to be final to take action. Too many tax savings could be at stake to risk running out of time to act. If you are affected by any of these 10 tax situations, please call us to discuss your circumstances. With so little time before the year ends to act, please check for tax alerts delivered in our email newsletter. Meanwhile, a dark new cloud gathered over Washington, D.C., following a guilty plea by the former head of the National Security Agency, Michael T. Flynn, for lying to the FBI about his contacts with Russia. Though the stock market briefly plunged 1% on the news, the Standard & Poor's 500 index recovered quickly when investors concluded that the headline-grabbing political crisis was less important than newly released data showing the economy in November was stronger than it has been in many years. On the front page of the Wall Street Journal last Friday, the president of the Federal Reserve Bank of New York said in a lengthy interview that the economy is doing quite well. Not only do I think the economy is in good shape today, I think the economic expansion is going to continue for some time. That same day, the Federal Reserve Bank of Atlanta predicted a real GDP growth rate for the fourth quarter of 3.5%, much higher than just a month ago when it expected a 2.7% growth rate. This suggests a growth spurt is underway. Meanwhile, real disposable income data was released by the Bureau of Labor Statistics. Disposable income after inflation is a really important factor in the economy because it measures what's in your pocket to spend, and consumers drive 70% of U.S. economic activity. Real disposable income grew at a 2.8% compound annual growth rate in the last 12 months. That's as strong as the last expansion, which was financed on bad debts. And in this expansion, Americans are better able to meet their monthly expenses than they've been in a generation. Despite uncertainty over the fate of tax reform and the change in political risk, investors in America's largest companies, the Standard & Poor's 500, a key growth component in diversified portfolios, has been hovering near its record close set on November 30th. The average share price of a stock trades at 19.9 times the S&P 500's trailing 12-month earnings and 17.4 times 2018 earnings, which is a bit rich but within the historical norm. Bad news could cause a 10 or 15% plunge at any time, and a bear market decline of 20% or more becomes more likely the longer this 8.5-year bull market goes on. But disposable personal income has been growing at a strong pace. The overall U.S. economy, according to a consensus forecast of economists, will grow 2.5% in each of the next 5 quarters. And inflation is almost non-existent. And that's very important because it makes Fed tightening less likely. And Fed intervention caused every recession in modern U.S. history. Point is, this bull market could continue despite the unusual swirl of events affecting your wealth.